Shmueli?
Yeah, hi everyone.
Okay.
Let me share.
Okay, I'm going to make you a co-host
screen.
right now, and you'll be able to. Hold on, what I just do there, Cass. All right, I pushed the wrong button. Hold on. Okay, you can now share your screen. Go ahead.
Okay. Second. There. Okay, is the right screen being shared? Yeah,
Yes.
looks like it.
You got it.
Okay. Hi everyone. Thank you for coming today. Hi, Shmueli. Thank you for setting this up. So welcome to today's QuickBooks online seminar. The goal of today's talk is to give you enough information to figure out some of the next steps of your own. This is a very concise and short lecture, a seminar. Basically give the overview of everything. Take a lot of notes because we have a short amount of time. We're going to go over things really quickly. Anyone who's here is expected, if you're having your own business, you work for someone else, you really have to figure some things out on your own. And I'm going to show you a little later, I'm going to show you a link in QuickBooks where they have like a dummy version of QuickBooks where you can play around. Sorry, one sec. Okay, so a little about me. My name is Shmueli Milecki. I'm a CPA and I have a unique focus on bookkeeping, CFO services, and advisory services. My passion is mainly regarding businesses, particularly those with technology and startup sectors. In my practice, I offer a lot of different services, including bookkeeping, consulting, advisory, CFO services, and tax management. What really excites me is the financial planning and CFO services and helping my clients get the success which they need in their business, figuring out a plan, adjusting a plan, and getting to where they want to go. Right now, my clients consider me an integral part of their success, and we have a great collaborative environment. Most of my clients are monthly retainers. I don't usually take on hourly clients because that's part of being part of their success is my success. Beyond my, my accounting practice, I'm also on the board of New York State Society of CPAs, which helps me get a lot of information that also as well, which I need to get, for my practice, what's going on in the industry, make changes. Looking forward to presenting with you and to helping you learn better QuickBooks. So now we're going to go towards the topics. The topics are the differences between QuickBooks Desktop to online. Topic number 2 is introducing QuickBooks Online and the different versions. Topic number 3 is navigating QuickBooks Online and the navigation bars. Topic 4, products and services. Topic 5, chart of accounts. Topic 6 is create transactions shortcuts, meaning there's a way to do it in each center. There's a shortcut to do it. Topic number 7 is the bank fees and bank reconciliation. Topic number 8 is vendors, expenses, and purchases. And topic number 9 is customers and sales transactions. Just remember, we're not going to go deeply into each one. We're going to get more of an overview of each one. So do you know that most businesses don't succeed if they do not have the right financial advice? Most businesses, a lot of businesses never should have started in the first place. A lot of other businesses, they fail because they have the wrong advice or they're not looking at the numbers properly. It's important that you know your numbers. I have a client, who used to complain to me. I go to visit them, once a month, once every 2 or 3 months, and they couldn't understand why their accountant, their in-house accountant, didn't know their books as well as I do and know their business as well as I do, even though I show up, only once in a while. So it's very important you understand your books. Whoever is doing your bookkeeping also has to understand your books or what your goals are. So the learning objectives of topic number 1 and 2 is to identify the benefits of QuickBooks Online and identify subscription levels of QuickBooks Online, which are best for your business. So question number 1 is why QuickBooks Online? For many years, we've all been using QuickBooks Desktop. Why are we doing QuickBooks Online? So, my first QuickBooks, was QuickBooks Online. It was QuickBooks Desktop probably around 2004, 2005. It was a very simple version of QuickBooks back then. Not a lot to actually get to know it. It didn't have a lot of the features, the functions which QuickBooks Desktop has now. Over time, QuickBooks decided that every 3 years they forced people to upgrade their desktop version. To do that, they have to offer more features. So they started offering a lot of good features, and a lot of features were completely unnecessary, like 5 ways to open a check, 5 ways to open a bill, a lot of unnecessary features, which meant that anyone who started learning QuickBooks, especially without an accounting background as time went by, QuickBooks Desktop, they were not able to figure it out, or they had hardships. It was hard. So enter QuickBooks Online. So the main thing about QuickBooks Desktop is reporting. It's also much faster. You don't have to wait for the website to load, but it's really the reporting functions, which are so much more powerful on QuickBooks Desktop than QuickBooks Online. So unfortunately, most people are just using the most simple reports anyways, so it may not necessarily matter. But for me, when I like the complicated reports, why did I change? So the QuickBooks, once they changed, they opened QuickBooks Online, they started a no-frills, kind of almost like a no-frills software. It was completely terrible. No accountants wanted to even touch it when they first started. But as time went by, they started offering features. It's still not as good as QuickBooks Desktop. It's lagging, it's slower, the reporting isn't good. So I refused to change. Eventually, I did change. Why did I change? Because it's better for my clients and has better online syncing, better better app experience, better bank experience. Anything which is kind of technologically advanced, they're better. Anything which is functionality advanced, the actual operating of the business is more advanced. That's QuickBooks Desktop. So let's say you'd have QuickBooks. I have clients in. Especially on the CFO advisory side, I have clients throughout the country. I have clients in Puerto Rico. I have clients in Israel. I have clients in many different places. How do I have them see their businesses? Because at the end of the day, I don't want to be holding their QuickBooks for them and they never look at it. Because I want them to see what's happening, what's going, the work I'm doing, how we can change things. They have to understand things that I can tell them, look at QuickBooks report, or I can online, or I can send them a report. But they have to be able to see that. So what's the benefit of QuickBooks Online? Ease of access, the apps sync well, the banks sync well, the matching feature works well. It's easier for someone who doesn't know accounting to use, and can support multiple users over a remote environment. That's the benefits of QuickBooks Online. Negative reporting, benefit easier for anyone in 2023 in a remote environment. So introducing QuickBooks Online. That topic number 2, which QuickBooks do you get? So again, we have a very short amount of time, so we're not going to go into the differences between them. But the main thing is Simple Start is for a very early business. Essentials, a little more advanced. Most businesses will be using Plus. Essentials tends to be missing out some of the important features you might need for a business. And Advanced, honestly, most businesses do not need it. The only businesses who have advanced is if they're extremely advanced. They're a lot of departments, a lot of divisions, and honestly, they probably could be using QuickBooks Desktop. Would be better for them, but they need that remote environments. But most people will not need to go further than advanced. The pricing you see on QuickBooks Online tend to be $85, turns to $42. It tends to be like a 3-month trial, trial to get you in there. They're not giving you, they're charging you the full thing. So navigating QuickBooks Online. So the third topic is, and I hope I'm not going too fast, I know we just have a lot to get through. Navigating QuickBooks Online and the navigation bars. Upon completion of this topic, you should be able to recognize the steps to manage accounts and settings, identify accounting-related preferences, discuss user permissions, identify additional transactions in the Plus new menu, understand the left navigation bar, understand where the lists are. So these are the different things which you can learn. We're going to go through right now. So first of all, we need to sign into QuickBooks Online. So one thing I mentioned before, you might want to write this down. I know I gave you show notes just now. I'm not sure if you sent them out, but there's a test drive. QuickBooks has 2 test drives. The first one we see over here is the test drive is basically for the less advanced QuickBooks. I think it's Online Plus. The next one is the more advanced QuickBooks. You have to sign in when you're not logged in, either on a private browser or when you're not logged into QuickBooks. Otherwise, it's going to switch over to your personal QuickBooks file. It's not anything which as soon as you close the browser which you're playing around with, anything you do in that file is going to be deleted. It only works as long as you're in that browser. Once you delete it, maybe if your computer closes, you're going to go back. It's any changes you made will be gone. And again, it's not your company, so it doesn't affect you. So the first thing we're going to go to, because we're going to start the way I've created this course is where we're going from top down. We're going to the major features first, and then at the end, if we have some time, we're going to go into expenses and bills and customers and sales. But it's basically main top down. What do you need before you even get to sales? So that's the navigation bar. The navigation bar is one of it's on the top right of QuickBooks. You know, as we just had right here, and the main thing of it is that it gives you the three main components. This is not in how to do where to do your transactions. It's more on the settings and help. So help is research questions, and you can chat with QuickBooks, meaning you're paying QuickBooks a monthly fee. You should be able to go there and ask them a question. So you can chat with QuickBooks. You can research QuickBooks questions, meaning from anyone can answer. You'll find QuickBooks has a lot of information online. Is it helpful? I don't know. Sometimes yes. So, you know, for me personally, usually the stuff I'm looking for, I'm not going to find under the research. I usually have to chat with someone, you know, but you know, each to their own. The next thing is search. Search is one thing I think a lot of people make a mistake is that when you look at QuickBooks online and you look at the navigation bar, you look at the banking, you think that's already in QuickBooks. It's not. This is just the banking is kind of like it's something between, and we're going to go to that a little later. The banking is between QuickBooks and between the bank and QuickBooks. It's like a middle stage where it's neither here nor there. So search transactions already entered into QuickBooks. The gear icon is to access any settings regarding your company, including setting up accounts, setting up classes, setting up products and services, manage the users, bank reconciliations. That's all there. Although bank reconciliations is in multiple places, doesn't have to be in settings, but that's where they put it. So this is the QuickBooks Online interface. Now, I will say your QuickBooks file might look a little differently, and we're going to go to that in a minute. Basically, they have an accountant's version and they have a business view. I personally like the accountant's version, and I believe that you can switch back and forth. So on the right, you have left navigation bar, which is basically your business centers. A center, you know, imagine you're in a store. You go to the department store, and in the department store, you're going to have, you know, or a grocery. You have a section for cold items, a section for a section for, I don't know, milk, let's say, a section for cereals. Now, most husbands watching this are like, there's sections in a grocery store, and I get that because my wife thinks I don't know that either. But there are sections in a grocery store, and the same thing, QuickBooks, you're broken up as sections. Customers, expenses, reports, sales, different centers. Now over here on top left is to create new transactions. Now, new transactions is kind of like a quick open transactions. You don't want to go into the center, you just want to do it from the new. Personally, I prefer going to centers, but you might want to go into new and create it from there. We'll go into that later. Then you have the help, which we just discussed. You have the search, which we just discussed, and you have the gear icon. So, and the gear icon has all the settings of your company. So, and remember I said that you have different ways you can look at QuickBooks. You have the business view or the accountant's view. If you go in the gear icon at the bottom right, you should be able to switch from business view to accountant's view. I do not know if that's in all versions of QuickBooks. The ones I've tested, it's in there, but I don't use anything under. I don't use anything under QuickBooks Plus. So over here you have your accounts and settings. You have manage users. We're not really going to go into manage users, but that's basically if you want to create user settings. Most small businesses will not need it. Larger, you might need it, but it may not necessarily do what you want it to do. Manage users isn't as as the functionality isn't as good as I would like it to be. Custom form styles, chart of accounts, all lists, products and services, and reconcile. These are kind of what I feel are the main things that any business owner needs to do in QuickBooks. Of course, you have budgeting, you have recurring transactions, which we'll discuss for a second. You have order log, but on a day-to-day basis, these are the sections which you need to know in order to run your business. And we're going to start off with accounts and settings. So accounts and settings, due to a lack of time, we're not going to go in detail into this, but we will go shortly. We'll spend a minute or two discussing the basic account and settings. So account and settings has some of your most important features like class tracking, division location tracking, your payment settings, your invoicing, your email messages, your legal information, your contact information. If you have settings when you send out a customer letter, a customer email, you want us to do it here. Other sales and expense settings, usage limits, your billing subscription, that is all in accounts and settings. It's very simple. All your settings for your business is here. Maybe if I created the software, I'd do things a little differently. I kind of feel invoice email messages should be under the customer center, but it's here. And it's worthwhile to play around here to get to know this a little better. Sorry, okay, so accounts and setting, from account settings, you get to the customer. The first thing is the company information, which is the only part we're going to discuss in the settings, which is basically you want to have your company information here, your legal information. If you're sending out EINs, if you're sending out 1099s, they're going to get that information from here. Your contact information, your address information, any stuff and information that you're giving to the customers is generally speaking what's going to be entered over here. We're going to discuss shortly, for a short time, but not a lot of time, custom form styles. What is custom form styles? Again, this is inside the gear icon. Custom form styles is basically the place when you have your business, you want to send customers emails with invoices or statements. You want to have nice statements and nice emails, that look professional. This is where you set them up, right over here. There is a way, if you're a little more technologically advanced, that you can actually customize your actual invoices exactly to your liking. But over here, they give a lot of settings which work according to the way QuickBooks wants to send them out. So now we're going to go to accounts and settings, and we're going to go back on some of the things we discussed before. So again, every single person is going to have certain things which they like to see in their QuickBooks, but we're going to discuss the things which I feel most important. Manage users, we discussed already for a second. Chart of accounts is the chart of accounts, which runs your whole business. Your whole business is being run from the chart of accounts. And we're going to go through that. That's probably the most detailed part I'm going to go through is the chart of accounts. The products list could be accounts, classes, product and services. And that's, it's the list which you need to run your business. Tags, it's the list that you need to run your business. So products and services. So then you have over here, you have under tools, you have what we said before is bank reconciliation. So, and what is that for? And make sure you have clean books. Now we're just rushing ahead. So, I'm just going to go back here a second, just in case someone wanted to see something. The next thing to discuss is search, the search option. What is the search option? This is not something I feel we have enough time to go through. It's more, and search option is complicated. That itself can be a whole class. So we're not really going to go into this. What we're going to discuss is that there are many different search options. You need to play around here. If the search is not pulled correctly, you could end up missing information. You might find one way you pull the report, you pull a search, it may bring up certain information, a different way it may bring up different information. You kind of have to get the hang of it. It's not as easy or technologically easy as I would think it should be for, considering that QuickBooks Online is made for the end user, not for the accountant. So on QuickBooks Online, we're going back over here. We discussed the centers. The centers are on the left. Centers are like the grocery departments, or let's say Macy's. You have menswear, women's wear. You have jewelry. You have different sections. These are the sections, and if you were a larger business, each section would be run by a different person, a different individual. In a smaller business, it's usually run by the same 1 or 2 people. So what are the sections? So the first thing is banking. This is to set up your banking connections and for bank and credit card accounts. Once you're connected, you'll see the bank feeds and any bank rules you've set up. For example, banking, app transactions, rules, tags, receipts. We're going to go in that a little later. The vendor center. Vendor center is where you control the expenses for your bills. So while banking, which we'll go to, is not really, banking is not really actually a kind of like it's like the main department, with a checkout. Banking is probably like the checkout department of the grocery store. Once you do your vendor, your customers, you check out in the banking where you match it to QuickBooks. So the vendor center is a department where you create bills, checks, vendor credits, credit card credits, purchase orders. That's all done in the vendor center. The customer center is sales receipts, invoices, receipt payments, credit memos. Again, you can do that from the plus new, but it's probably easier to run your business if you're doing it from the center. Reports. The entire reason of accounting is reports. You're going to find them over here. And taxes, this is where you pay your sales and payroll tax. If you're subscribed to QuickBooks Online Payroll, you're going to do that over here. So we're going to go first, start off. A lot of businesses, depending on what you do, you're going to need products and services. If you sell on Amazon, if you're a tech developer, when you send out invoices you need products and services. When you write bills, when you receive bills or expenses, you need to use the products and services. But whenever you have invoices or sales receipts, you need to have products and services. So this is one of the backbones of your business. So you go to the gear icon that you discussed, top right. You come over here. You have all lists, and you have so there's a few ways you can go here. I don't know. This is almost like QuickBooks Desktop. A lot of ways to do it. You can go to all lists, or you can go to products and services, which is right under all lists, and get that directly. If you go to all lists, you're going to see all the different lists you have: chart of accounts, recurring transactions. Recurring transactions, what that is mainly that you have the ability to have a transaction. Let's say you want to send every month, you send the same invoices out. If you want to send out the same invoices on a monthly basis, are we having an issue? I'm seeing something about people having issues here with the slides. I'm not sure if it's just a slide, just the internet connection with the slides. So on the chart of it, so you have the recurring transactions to be able to duplicate a transaction you have. So you want to send the same invoice every month. You want to send the same, thank you. Want to send the same invoice every month. You're going to use recurring transactions to duplicate that invoice. Now, so back to that chart of accounts, which we're going to go to later, recurring transactions, we just discussed, we're not going to go into later. And then you have in the gear icon, you can touch products and services there, or you can touch it right over here. That's for products, set up your products and services. Product categories. What is product categories? Product categories is if you want to have different categories of products and services. That's where you're going to do that there. And custom form styles, which we discussed, that's all under all lists. Is custom form styles is to be able to create the design for your statement, create the design of your invoice. So here we go to products and services. Products and services, if you want to create them, we don't have enough time to go in detail on how to create products and services, but we're going to go just a drop, just a touch, just enough, to be able to have some information. So you might go to new to create new product and services. You might edit it. let's say we're editing a product or service which we already have. So we have a new product or service. It's called Concrete. It's under the category Design Fountain, and right now it's a service. We can say I want to be an inventory or non-inventory. Inventory is very important. That all inventory items, meaning cost of goods sold, stuff you sell to your customers, that you buy. Not, let's say you have services which you sell. We're talking about products. Let's say an Amazon seller that you buy and sell to your customers. That's inventory. Non-inventory is stuff which you sell, but you don't need buy and sell. You don't need to track. Most people don't really need the non-inventory side. It's more inventory or service, which you need. Service is, let's say you're a tech company, you're working, you hire employees and they do work for your clients, or you're an accountant, you hire employees, they will do work for the client. So you're going to call that a service. The difference is that inventory, when you have an inventory, what happens is it creates, when you sell that, it creates an expense. And it also creates income at the same time. Service, it only creates income. It doesn't, it just means you sold something, you sold the service, you get income. When you have inventory, it means that we have to take that money, we have to take it out, deduct it from the inventory balance, expense it in cost of goods sold, and then put money in the bank and pull that income. So inventory has multiple things happening when you use an inventory item. Service, just income. So this is the breakdown of a product and service information for inventory. So you want to make sure you have the right type, the name, you have categories, which we discussed before. Over here, you have the sales price. If it's the same price for everyone, if it's a different price, you may not even want a price here because you're going to change it every single time you create an invoice. An income account. Every single product and service needs an income account. Means what income, what type of income are we calling this? Because products and services is kind of like back-end information that does not end up in your profit and loss. The income account ends up in your profit and loss when you look at your financial information at the end of the year. So you have a few different options. You can put this that I sell products and services to my customers, which is usually for a service that is all you need. You probably should not be using the next option, which is I purchase this product and service from a vendor. Taxable, if it's taxable, you should have a standard tax rate for each customer. Now, the difference over here is like I discussed on the product and service information, you have inventory asset accounts, you have the income account, which we discussed, you have the cost and the expense account. So there are multiple accounts being hit when you have inventory. When you have products and services, it's only you put money in the bank and you get and it's called income. So and over here, you may want to adjust your quantity at hand. This is much more complex than we have time for at this discussion. So chart of accounts. Upon completion of this topic, you should be able to establish, edit, and work with the chart of accounts. So before we get into, we're going to speak of the salacious story of a client of mine. So meet Tony. Tony, he when I met him, he came from another CPA, and this is the story he told the CPA, because I would never say that this happened to me. So Tony told his CPA that, you know what, I only eat in the office. All my expenses for food are all office expenses. He only sleeps in his office. He doesn't own any documents, and if he owns them, they're straight into the shredder. He mixes uses his business card to buy personal expenses, his personal account to buy business expenses. He just mixes it all up. So at the end of the day, he was really stuck because he had no clue where his finances were, other than he was saving a lot of money in taxes because everything was business expenses. So unfortunately for him, at the end, nowadays Tony is now sitting in Arsenal, as a Choser B'Teshuvah, and he enjoys the kosher food over there. So the lesson is don't be like Tony. Now, if this story rubbed you the wrong way, it's because it's supposed to. There are so many people who just mix and match business and personal, or from one division in a company to another division in a company. And it may be good for your taxes, even if whether it's kosher or not is a different question. But if you're trying to understand your business, it is impossible to understand your business if you mix personal and business. So don't be like Tony. So the most important thing which we're going to go into is the chart of accounts, because chart of accounts is, I guess, if we were software developers, we call backend. This is the backend development of the company. And every transaction that you use, you're going to use a chart of something in the chart of accounts. It seems complicated to create, but the better work you do in your chart of accounts, the better you set it up. That is, the better your business will function, the better you'll be able to see your reports and understand your reports at year end. So you can reach, so the chart of accounts has two sections, chart of accounts and reconcile. Reconciliation we'll go into a bit later. And you can reach chart of accounts by the two menus, the gear icon, which we mentioned before, and on the side, the section called accounting, the department called accounting. Those are the two ways that you can reach the chart of accounts. So what is the chart of accounts? So the chart of accounts is pretty much basically, it's made of anything you need in your business to know. So we started, the first section of the chart of accounts is the assets. The assets are the cash, the bank accounts, office equipment, office buildings, machinery, goodwill, accounts receivable, inventory. It basically means that you own it. So you have it. You don't own it, but you have it. Why don't you own it? Because from assets, we deduct liabilities. That's the next section in the chart of accounts. The liabilities is the credit card, which you owe, accounts payable, the payroll liabilities, a bank loan. Imagine you own a house. You own a house, but do you really own your house? No, you don't. The bank owns your house. You might own $100,000, $200,000 worth of your house, but the bank really owns the rest. You don't own your house. The same thing is, you don't fully owe your business. You owe it to the bank loan, you owe it to your credit cards, and the guy in Shmueli you borrowed money from and you never gave it back. So then you go to and so assets minus liabilities equals equity. Equity is the capital, what you own, capital drawings, current net income, retained earnings, which means prior net income. It means the difference between assets and liabilities equals equity. That is the main part, the main standby of the chart of accounts. And what the balance sheet is, it's a statement of where you are right now, what you currently own, what you have, what you owe, and what you own. The statement of what you have. Now, it could be positive, it could be negative. Negative could mean that you took out too much money. The many people who got EIDL loans, they're not supposed to take it out for personal, but somehow or other, the personal EIDL loan ends up on their personal bank account. Instead, the business EIDL loan ends up on their personal bank account instead of the business bank account. Of course, we won't name names, but that's so what you're going to have is a negative equity. That doesn't mean the business is not doing well, but very often, if it's negative, it could mean that you should really be questioning, is the business doing well? The business isn't making enough money to pay for your expenses or even to pay for your personal distribution. If you're an LLC, you're not getting a salary. So the business might look like it's making $200,000, but if you take out $300,000 each year, it's not really covering your personal expenses. So the equity could be positive or negative. Back to equity, it's basically current year retained earnings plus minus prior year income and loss, plus any investment you put in that will make your equity higher. Any withdrawals you take out will make your equity lower. And again, that is the difference between what you have and what you owe is what you own. So the next part of the chart of accounts is the income. So what is income? Income is your sales income, your consulting income, shipping income, any income that your business makes, that is the income section. After income, you deduct your cost of goods sold. Most businesses usually skip this part where you deduct the cost of goods sold. But after income, you're supposed to deduct cost of goods sold, which is cost of inventory if you're selling inventory, cost of labor if you have work which you're doing, let's say you're a tech company, or accountant, you have X amount of employees which are doing the work for your clients. So in order to bill a client, let's say $100, that means $70 of that, or $40 that goes to your employee. That means you only make $60. So that's between income and cost of goods sold. That's the gross the gross profit. That's basically the difference between profit before operating expenses. There's that famous, and I don't remember offhand how it is. I tried looking for it, I couldn't find it. The famous, Jackie Mason show, where he goes on and he says, every Jew sitting here wants to know how much I make. There are 1,000 seats here in this auditorium. 1,000 times 100 is $100,000. How much does he make? With his suit, he got it from Saks, $500 suit. He must be very wealthy. So what happens is that we're not looking at cost of goods sold. So we look at it and we do the same things. We look at, sometimes people speak about schools. The schools are making all this money. Where does it go to? What you're not thinking about is, what does it cost to run a school? What does it cost to run a business before even you can get to paying the rent? And knowing that, and an example of this would be for an Amazon business or a retail business, a store on Kingston Avenue. Let's say it costs you 70 cents for each dollar you earn. So a business is making $100,000. 70 cents on each dollar you earn goes to cost of inventory. That means the business only makes $30,000 over the year, not $100,000. So you look at it like, that's so nice. They're making $100,000 a year. You look at the guy in Shul, he's making $100,000 a year. We're not talking about New York City. We're talking about some other place where they can live on that. So we look at Shul. So you guys making $100,000 a year. He's not. He's making $30,000 a year. Now, which he can use as he sees fit. Like a person, you can say, I don't want to pay rent. I'm going to work from home. I can cut that. That's an operating expense. You can't cut cost of goods sold. So it's very important to know the difference between the two. Even if your accountant is not putting the cost of your services in cost of goods sold, even if that's not how you're filing your taxes, because it does not have to go that way, you should have a calculation to know the cost of goods sold, at least on a spreadsheet or something, to know what is your gross profit before operating expenses, before the expenses, which some of them I can choose to pay or not to pay. A tech company, they may have to spend 40 cents on the dollar. If they make $100,000, they get 60, 40 cents on the dollar cost for their employees. They get $60,000 back home, not a full 100,000. An example, during COVID, I had customers, who worked closely with me, and before the government loans, which kind of fixed everything for everyone, before the free government money, the PPP, the EIDLs, that they were wondering how we're going to survive. And they really had to know how many employees do I need to be able to survive? Can I keep my employees? Because the rent, they may have had to, keep or not keep, but employees, is my business going to be able to make, let's say I have to make $60,000 gross profit to survive. Where's my income high enough to make that? Is my cost, do I have enough customers? You may decide maybe I need a lower income amount, but more customers to make this go. That's all in the cost of goods sold, which gets you to the gross profit. So after that, you take out expenses. What are expenses? Expenses are advertising, bank fees, professional fees, loan payment, supplies, payroll, all the expenses a business will have. After that, you get to the net income or the loss of the business. That's the whole, and so of total business. And once you do that, that comes to equity. That goes into your balance sheet of what did you make this year? Does your equity go up in the business? If you made money, does it go down if you lost money? So let's go back here. That's a chart of accounts. Once you finish this whole thing, this whole scenario, which we just did, you're going to go to the reports. We don't have enough time to go to the reports, but we're going to discuss the two main reports, which are the balance sheet and the income statement. And as we said, the balance sheet starts with assets, what you have, minus liabilities is what you owe, equals equity is what you own. That's the financial statement, the financial standing of the current. How healthy is the company right now? What do you have? What money do you have to be able to work for the future? Do you have to put more money in the business in order to plan the next year? After that, you get to income. That's the next session chart of accounts. Deduct cost of goods sold from that, gives you the gross profit. After that, you deduct your operating expenses, and after that, you get your net income or loss of the business. That is those reports, and that is how they tie into the chart of accounts. And every single account, when you create it, has to be created with that knowledge. Creating transactions. So let's take a look at how to create transactions. Now, first we're going to do that shortcut slide, which I told you about, which is going to new. So the new has several different sections. It has the customer, almost like the customer department, the vendor department, employees, if you're using QuickBooks Payroll, and other is a few things which don't belong anywhere. Let's just put them over there by other. Customers to be able to quick create an invoice. If you were, for example, if you were using QuickBooks Desktop, you might use Control W to create a check. Over here, there's no controls. You have to actually go in here and open it. That's where you would do it over here. Next, we're going to go into bank reconciliations. Now, as I said, I'm going this on a level from top to bottom because bank reconciliations is very important to be able to do in order to understand your business. You need to be able to reconcile your bank accounts. So the banking center has a lot of benefits and a lot of negatives. But before we get to that, you have the option to link your accounts. That's to add bank accounts here. If you want to deduct your bank accounts, or you actually taking off your bank accounts would be on the actual bank. There's like an edit field that you see on the MasterCard, $304. But to add a new account, you go to link account. To update an account, what happens is very often QuickBooks will give you the transaction that's going to be a day old or 2 days old. Sometimes you just want to go. If it didn't pull the transaction from the bank account, this bank center means it pulls the transaction from the banking from the bank account. You're going to update it if it's missing the last day or two. As I said earlier, the banking center is kind of like the checkout counter, where basically you go and find the transactions already in QuickBooks and you match them to the bank account. You press match, and now it's going to show up eventually in your bank reconciliation as something that you matched. You can also add from the bank account, from the banking center with a transaction which you did not enter yet. You have rules. Rules is very important because if you want to add transactions, okay. Sorry, I see someone's writing that I'm a little too fast. I'm sorry about that. I think I'm just trying to reach a lot of things. I'll try to slow down a little. Rules. If you have rules if you want to create a new transaction, if you want, and you don't want to say every time this transaction comes out, you see Amazon is always office supplies. I don't want to write every single time Amazon is office supplies. I just want QuickBooks to know it. So I'm going to make a rule that every time it says Amazon, says office supplies. Be careful over here because in rules, they give you the option to auto add, that QuickBooks will automatically add before you see it. You should never let QuickBooks automatically do anything for you. The banking, the banking center over here are the checking, the savings, the MasterCard, the different bank accounts which you have, which are connected to your business. Any bank account which goes through your business should be here. Over here is to add or match transactions. Over here is the dates. And if you want to select transactions, if you want to add multiple transactions at once, you would select them over here. So categorize, we want to categorize the transactions. So we have a new transaction, we're going to manually add. This is manually adding a transaction. So we want to, instead of, you can click add, but if you look at this one, it may not necessarily have the information you want. You may want to change it. So you're going to go to here to categorize the transaction. You can click categorize, you can find a match, meaning it's already in QuickBooks, you know it's in QuickBooks, but QuickBooks for some reason did not match it. You can record it as a transfer. Transfer, what does transfer mean? You transfer it from one bank account or one credit card in QuickBooks to another bank account credit card. You want to make sure your customer name is in there, your category is in there, and over here at the bottom is what we discussed before, is creating a rule. So again, every transaction in QuickBooks must pass through the banking center at some point, whether you added it manually inside the billing or inside the vendor center, inside the customer center, or whether you added it by going directly into the banking center and add it from there and quick add it, just like the one you see over here. It has to go through QuickBooks. Here's another example. Here's an example of matching. Now, beware when you're doing matching. It's dangerous because simplicity makes danger. Easy to match means easy to make mistakes. So in this example over here, if you see this match, you're going to see one match found, 868. The invoice was 1017. The payment in the bank, that's 868.15, is what they QuickBooks downloaded from the bank. So it's trying to match the two. Now, what happens if, let's say, that instead of being 868, the number was $800 in both places? Now, you may have a lot of customers who are paying $800 to your business. So if you're just going to go ahead and match it without double checking, you may match it to the wrong customer. 868.15 might be a little more unique. It might be easier to match, but you should always double check that you're matching correctly, because QuickBooks will not double check for you. So you have to make sure that you're doing this correctly. So what is the matching center? Where does it end up? How does everything end up in the matching center? You enter a bill, you pay your bill. Then you match it in the check in the bank account, which goes to the transaction center. ACH, the wire, the payment, everything is in the banking center. Enter a client invoice. You go from there to receive payment, and then you match it in the banking center. A loan receivable, you might want to do that directly in the banking center. You don't even have to necessarily add that, as a bill or an invoice, dependent on your business requirements. What if I pay with my personal account or credit card? We're going back to don't be like Tony. Mixing and matching makes it very hard to run your numbers, to be on top of your numbers. And this comes in as non-posting. Unless you match and add, it will not appear in any reports. It will not appear in your searches either. So, as we said before, when the transactions are pulled in, they are non-posting. This means that you are looking at the list of transactions the bank or credit card says you have. They are not recorded into QuickBooks until you match them to previous recorded transactions or use them to add transactions to your register. If every transaction that hits the bank is mapped to the banking section, the reconciliation will be simple. However, many businesses, it's not that simple. It's really a little more complicated. So what is bank reconciliation? So we've matched everything. We go to the bank reconciliation. And the bank reconciliation is really to make sure, did you actually match it correctly? Is your banking, is your credit card, your bank account, it's what it says has in the bank, the money that QuickBooks says you have in the bank or paid in the bank, received in the bank, is that actually what you see in QuickBooks? And is that what you see in the bank? So first of all, we go to reconcile the account. We discussed before, you can do it from the gear icon on the top right, on the accountant, you have in the bank, you can do it from the banking center, the multiple places you can do it from. So we choose the right account. We add in the ending balance, and we end in the statement ending date. You need that because QuickBooks needs to know the difference between the beginning balance, which in this case shows 0, because it's a fake account, and the ending balance, which is $8,000. So you have to show the difference between one and the other. So once you click that, you end up at your bank reconciliation. What is the bank reconciliation? We're not going to go to how to do a bank reconciliation. We're going to go to what is a bank reconciliation. So you have your beginning balance, which is, let's say, $5,000 over here. You add from here is $2,000 your deposit, all the deposit you had during the year. That is $2,281. So now the business has, before taking in any payments you made in this year, as per the bank, the business has brought in now has $7,281.55. But they don't, because you have to deduct all your payments, which you had that year. So deduct $2,513. Now, what happens is that technically speaking, once you finish this, you should get to the statement ending balance, which is $8,000. But oh no, we haven't, because we've only gotten to the cleared balance. We only cleared out, according to QuickBooks, the balance is now $4,767.67. If you look at the bank account on May 31st, you're going to see that the balance is $8,000. So that means we haven't done the bank reconciliation correctly. Either we didn't match correctly, either we didn't add in either we match correctly, either we may have deleted transactions from the matching, we may have not put in bill payments, we may have not put in deposits. We have to go look through and look. If you see behind all those numbers, you see the gray part and the white part. The gray part is the transactions which you have matched. And usually when QuickBooks thinks it's going to do that automatically for you in the matching center. The white parts you have not matched yet. So that's the two differences between the gray and the white, and you have to go through them all. So once you do that correctly, you should have they two should match each other. Now, why do you have to do this matching? Because you may have a check. I write a check. I had a customer years ago who came. They had another and someone else doing their accounting before. And this was going back, let's say I started in 2015, and they had checks going back from 2001, 2002, 2003, like $20,000 or $30,000 of checks, which never cleared the bank account and were at least 10 years old. So I asked them, why do you have all these checks which were never reconciled? If they didn't reconcile in the bank account, you should have deleted them because they're never going to connect to the bank accounts because they're 10 years old. So they told me that their prior accountant told them that this is called their slush funds. So basically they have this money here. So if they don't have enough money in the bank account, they've always overcompensated because they have a slush fund of extra money in the bank. You really have to be running your books properly to know what you actually have, what you actually owe. Don't rely on, don't create unnecessary slush funds in your bank, in your business, because that's all going to end up, if you're going to match everything, it's not going to match the bank. So you want to make sure, so any checks which have not yet been cleared, you wrote a check on May 31st, it gets deposited in the bank on June 5th. So in the bank, it shows that the check wasn't deposited in May. In QuickBooks, it shows that the check was written in May. So you have a difference between the two, which is why a bank reconciliation is to iron out what are the differences, and then each month you have to know that I have to catch up this check in June. And if that never catches up, then you have to ask, why is that transaction, now in 2025 and that 2023 check is still there? Why does that transaction still show? I have to delete it. That's why you have the bank reconciliation. And that shows the difference. Running a proper bank reconciliation makes sure that everything else in your business is the checkout line, everything else in your business has been run correctly. And the $3,232, the difference between what it should be and what it means that what should be $8,000 and what it actually is the clear balance of $4,700. So bank reconciliation is pretty much like a match.
Really?
Yes.
Sorry, so we're 1 hour in at this moment.
Already?
How much longer do you have? Much more do you have to cover?
Tell me how much longer you want to give me, and I'll go.
Again, you could go as long as you want. I just, for people's expectations that are on, because we advertise it as 1 hour. How much more do you have left?
If I go fast, probably 20-30 minutes. If I go slow, longer. So I'm going to try to go fast.
All right, so let me just make this announcement to everybody that's here, okay? Because I don't know, everyone has busy days. Shmueli is going to continue and finish the presentation, and it's being recorded. For those of you that can stay on, by all means, stay on. We're keeping it going. If you need to leave, it's being recorded, and we're going to share the recordings with everybody. So Shmueli, the floor is yours. You keep on going. You go as long as you want. Whoever is enjoying this could please stay around. You'll also open up for Q&A later. If you need to go, we understand, and it's being recorded. Thank you.
Yeah. And I apologize in advance, or not in advance anymore, because unfortunately, QuickBooks, it's really hard to get it down, into a short period of time. We're trying to mainly go the overview. We're not actually going even into the main features, into how to create transactions in QuickBooks. So reconciliation is basically matching. You match 2 cars, two birds, two cows. Match the bank to QuickBooks. You can play a game and match it. You win. If you don't do it properly, I guess the IRS wins. So match all bank transactions to QuickBooks and all QuickBooks transactions to the bank. So vendors, expenses, and purchases. Establish a new vendor. I'm not even going to discuss this now because we're rushing for time. So vendors. So on the vendor center, we have on top, we have a different sections which you have in the vendor center. You may want to look at overview expenses if you want to see all your expenses. If you want to look at all your bills, you can look at there. Vendors gives you the full run out of each transaction by the vendor. Contractors is for 1099s. So the thing you're going to go over here is you're going to come and click find a vendor. Find a vendor is going to bring you to this page, which basically takes right now you see all the names are on the bottom. They're going to end up now on the left, right over here. And you can switch over here from one vendor to another. In the vendor center, you can create new transactions. You can mark it as paid, which new transactions, bill, expense, check. Mark as paid is basically to schedule a payment online. So really, it's free if you do it properly. It's free to send payments through QuickBooks. But you have to do it properly. If you send a check, it costs money. If you pay it online, it's free. ACH is free, at least for now. They're always changing the rules. They're probably going to figure out how to charge people for that at some point in time in the future. So you go to the bill. The bill has different sections. You have the name, you have the address, you have the category. And a bill, like I said, you can have category, or a category really means the account from the chart of accounts, the amount, the taxes, is it taxable or not, is it billable, and who's the customer. So billable, and there are some other things which that we're not going to mention everything. Billable basically means that if I pay a bill, let's say I'm a software developer. I have a bill for I buy some product, a product for a customer. I want to bill them for that product. So I'm going to put that as billable and customer. Then when I go to that customer, it's going to show that this has to be billed to the customer. That's if you check billable and you check customer. If you only put in customer, that can help you pull a report of what a customer cost you. So you're not billing to the customer, but you want to know what did the customer cost you. You're just going to do customer. You want to put billable. It won't show up when you try to write the customer invoice. You have bill number, you have bill date, due date. We're not, terms. We're not going to go into all of that. And you have two options when you have a bill. You have category details, which is category or account, or the item details of product or service. Now, when you have the invoices, you only have items. You cannot put it as a category or accounts from the chart of accounts. When you have a bill, you have the choice of which one to do. Mostly, you're probably going to use category account unless it's something you're selling to a customer, which is that, and especially if you want to make it billable, so you're going to want to use the same product service for the customer, and you're going to use product and service. That means you also may have to change the way that product and service is set up in the categories, because you're going to have to mark this off as I sell this to my customer. Bill payment, you have to make sure it's matched to the right bill. So you have to look over here. There's only one bill. You may have 5 bills. Make sure you're paying the right bill and this is all doing it manually. So we're not waiting for QuickBooks to match it. We're doing this manually. We pick the right bill. We pick the right bank account and credit card. So that's making the payment. We have the right vendor. You mark as paid. If this was already paid in the bank, it's going to show up and matching. The bank's going to ask, do you want to match this transaction? That's that's the billable part. I think we're going to even less than 20 minutes. Topics 9, customer sales transactions. So we're going to create a transaction, determine appropriate sales related settings, recognize options for setting sales transactions, recognize features online services. I think I mentioned online services already before with how to pay it through Milio, which is you're going to have to send up. So in the sales center, you want a custom, if you have the overview, you have invoices, you have customers, sales, products and services. Products and services is another way to see your products and services. All sales, all your sales. Invoices, see all your invoices, right? And reason why you might want to use that invoice tab is because if you want to see which customers owe you money, who've paid you, who has not paid you yet, you want to pull them all by invoices because you don't want to go to the customer. You just want to see who owes you right now money. You can filter it out to say anyone who has not yet paid. So that's the invoice section. So we're going to go to the customer section over here. So the first thing you do with a customer is new customer. Now, I did not do this on the vendor center, although the vendor center also has the ability to create a new vendor, because it's more important than the customer center. Why is that? Because a customer center, not every time you write a bill, it's not going to show. If you can put in the bill, when you create a bill, or a sales receipt or an invoice, you can put in customer information on the actual sales receipt. But it's not going to fill out the email necessarily if you don't put it there. It may not put it, it's definitely not going to have information for the tax information, if it's the person's 1099. It has much more limited information. You want all this information, additional info to go under the customer. So you have to you have to edit the customer if you've already entered the customer, or add a new customer and put in all this information like this. So we're going to create a sales receipt or invoice. First, a sales receipt. The sales receipt, we have the name, we enter the email. Email is very important, especially if you're sending it, you're sending it online. You're going to put the address, the amount, tax. If you're charging them tax, that you have to mark them, check off they're taxable or not. QuickBooks should be able to figure out what the tax rate is, if you have the settings correctly. Reference number, the product or service we already discussed. That's a product or service which has to be matched in the product or service section, which we discussed before, to the right account in your chart of accounts to get you your right profit and loss. And deposit to. Deposit to, undeposited funds. Which bank account are we depositing this to? That's the sales receipt. Creating an invoice. I'm just going to check back here for a second, just in case anyone wanted to write anything down, because I know I did do this a little fast. And then next, we're going to discuss creating an invoice and the different things which are important in an invoice. Again, we're not going very detailed into this because we don't have enough time. I think Yeshua is already trying to kick me off the call. So the invoice number, the invoice is, you have your invoice. Again, you have your customer name, you have the customer email, you have the billing address, you have the amount, tax. You might have a reference number, although this one doesn't say reference number, but you should have the reference number if the settings are correctly. Your product and services. You can also have a description if you want to write to your customer. So an example is product and service versus description. Is that product and service is going to be internally, but you may have that description. The way you set up on your invoices on the format I showed earlier. Is that you may want the customer to see product and service. You may also want them to see description. Or very often you probably don't want them to see your internal products and services. You only want them to see description. So description is very important to have out, especially because if you choose to only allow the customer to see description, they won't see anything there if you only mark out the products and service. So which means also when you create the item, the product, you also have to write a description for that product. Quantity and rate, if you see quantity is, if you have, you always have to put quantity, if the service, very often the quantity is just going to be 1. If you're selling books, for example, the quantity might be 20. And the rate would be, let's say each book is being sold for $20. It would be quantity would be 20. The rate would be, the rate would be 20, and that would be the difference between the two. That would be the difference between the two. Now, once you finish that, you come to receive payment. Receive payment, you go to the customer. And you have to make sure, you always have, that's just doing it manually. Remember, I said this is manually. You make sure you have your customer, you make sure the payment method is. Now, the payment method might be American Express, might be cash, check. How do you pay? Is this necessary? It depends on you. In the old days, it was very necessary because, different things didn't sync as well. Nowadays, it's still necessary, but how often do you look at that? I don't know. But it's good to have it. If you can do that, that's better. One of the issues with QuickBooks banking transactions is that when you do that, or those automatic payments on the banking center, it's not going to give you the payment method. But in my opinion, depending on your business, very often it's not worth going to receive payment here if you figured out a way to properly do it on the banking center. If you haven't figured out the way to do it properly without mistakes on the banking center, you should probably do everything manually. And you should probably do a lot of things manually until you get the hang of it as well, of running QuickBooks properly. You deposit it too, the same thing, you're going to see this in the sales receipt, undeposited funds over here. If you have what's undeposited funds means that if I have 5 payments of $200 into my bank account, let's say it's a credit card, which that's the better example. A credit card, you receive $200 for 5 customers, it's $1,000. So the received payments is Receive the payment shows that money as received. Now, if you're going to put in, let's say, the checking accounts as deposit to, you're going to see in the bank feed or the bank transaction that on bank reconciliation, $200 times five different times, which is not going to match the bank, which is $1,000 once. So you put in the undeposited funds, which is almost like a holding account between the bank and QuickBooks. Now, why would I use a checking? Because if I receive one payment for a customer for $1,000 or an ACH, and there's no other transactions in there, then I can just do $1,000, put it straight to the bank account. I don't have to need that middle party. That middle party, that undeposited funds, is when there's multiple transactions, whether it's multiple deposits or multiple credit card transactions. And the amount received, that wasn't supposed to be or. I made a mistake over there. But the amount received is supposed to be matched to the open balance. Usually the amount received is $200. Like I said, that or is a mistake. It's supposed to just go there. The $200, let's say you receive $200 or $239 from the customer. The open balance is $200. So they've overpaid. You have to figure out, why is there an overpayment? Is the customer's mistake your mistake? The vice versa. If you received if you received $200, open balance is $200. Did the customer underpay, or did you have someone have a discussion with them, trade? So you always have to double check that those two match. If they don't match, the customer may owe you money and may be fined, or it may not. So don't forget to match in the banking center and then go to bank reconciliation. So we're going to go back to topics we discussed. Topic 1, differences between QuickBooks Desktop to QuickBooks Online. Topic 2 is introducing the different versions. Topic 3 is navigating QuickBooks Online. Topic 4 is products and services. 5, chart of accounts. 6, creating transactions. 7, bank feeds and bank reconciliation. 8, vendors, expense and purchases. And 9, customers and sales transactions. Now ready for questions. Then thank you everyone for staying by. I know this went a little over time. Thank you for everyone for listening. Yeshua? Yeshua?
I have a quick question.
Okay.
Can you hear me, Shmueli?
Yes.
And I missed the beginning, so if you answer this, I'm sorry.
Okay.
Do you if I have a small business, do you recommend learning how to do bookkeeping yourself and doing it in-house? Or even if it will cost and not necessarily, could you afford in the beginning to outsource it to a professional?
Okay, so that's a very good question. The question number 1, if someone comes to me, is the question is, can they afford my services? That's question number 1. If you can't afford it, you should do it. You should do it yourself. Now here's the thing: when you hire a bookkeeper, you hire someone. So what happens is you're starting off. You don't have, your money. If you're, I don't know who you are. So I'm just, your name's Ari. I don't know any, so I'm not speaking about you specifically. But if someone's starting off a new business. The money is limited. So you say, you know what, I'm going to hire a bookkeeper. Of course, I can't afford to hire the best bookkeeper, so I hire someone, who's starting off. What happens very often, and I'm not trying to put anyone down, is that if they're learning on your books, they're learning on you. So it's very likely that you may do a better job than them. The negative of you doing it yourself is that again, this is taking up a lot of significant amount of time. Time equals money. But as for a small business owner, if you're tech savvy, if you're not tech savvy, or it's too hard to learn QuickBooks, give it up. Don't try to use QuickBooks if you don't get the tech. But if you're a type of person who likes technology and is good with this stuff, chances are this is your business. You care about it. Your employee does not care about it. So if they know the software, it's one thing. If they don't, they're learning on you, and the mistakes don't really affect them, because at the end of the day, I think the Friedrich Rebbe has said a thing about that the Baal boss, he goes home at night and that they have difference between the Maimer. I think it's a Maimer with the Friedrich Rebbe, that the Baal boss goes home. He goes home and he's worried about his business. The difference between the Baal boss Yeah, oh, that's okay. It's the famous story about the Sippa. But basically, the Friedrich Rebbe said that the Baal Basi goes home at night and he has to worry about the business. The employee sleeps soundly, the Friedrich was explaining why he cares about the fact that the Russian government were creating rules, and even though if he couldn't do something about it, it still mattered to him because at the end of the day, the Friedrich Rebbe was the Baal Bas. But the same thing, you're the owner, you care about it, you can't sleep at night if it's not done properly. So you really have to figure out who you're hiring, can they do as good job as you? Because at the end of the day, you care more, so you may make less mistakes as long as you're able to do it.
Thank you.
Any more questions?
I have a quick question.
Yes.
How's it going? First of all, thank you for giving this class. Would you recommend any specific resources or courses to become more familiar with QuickBooks Online?
So QuickBooks Online I can't tell you how good it is for a layperson, but they do have, once you sign up, they do have courses to take. As far as which courses will teach you, I don't know. I mean, I'm sure you can Google it. QuickBooks probably provides resources, but I'm not sure which course you could take. I'm sure there's courses out there. The question is a good question. I don't know. Are you asking as someone who's a business owner or someone who's trying to be a bookkeeper?
So I'm actually studying accounting right now in Turo, but the practical, bookkeeping. I mean, QuickBooks usage is not exactly on the course material. So
Okay.
how would you get some experience with it?
So I don't want to get touchy and feely over here, but I mean, I know Coke, for example, and I'm not telling you to change. I mean, there's benefits to each. I think they focus on QuickBooks, although I'm not sure if it's QuickBooks Desktop or QuickBooks Online. It used to be Desktop. Hope by now they've switched to QuickBooks Online. But I would try to, I'd say maybe speak to some guys, at Coke or at what's called PCS, I think it's called. See where they're studying, where they're getting that additional information from. I know that Turo kind of sticks to the book. My belief is that at Coke, I know they teach it. PCS, I'm not sure, but I assume that they're more involved in giving people that advice of what courses to take.
Right. Okay, thank you.
Any more questions? Any more questions? Yeshua, where are we holding?
I'm sorry, we're still here. And I'm sure you mentioned in the beginning, but do you offer bookkeeping for businesses? Is that?
Yes, I offer business. Yeah, I offer business. Yes. My main focus is business CFO and accounting services, advisory service, financial planning, growing the business. I don't really do. I mean, I don't know what stage you're at. I don't really do hourly. Unless I see it, something going towards, becoming monthly, a monthly retainer. But yes, that's what I do. Yes.
Shmueli.
Yes.
Hi. What do you say if I use QuickBooks but I don't connect it to the account, just in order to enter the information and to be able to create reports?
I would say that it's very inefficient to do that, because the main benefit of QuickBooks Online, if using QuickBooks Desktop, it's different, is not the speed. The QuickBooks Desktop is much faster. The main benefit of QuickBooks Online is the fact that it syncs with banks. You go to the banking center, and especially if you're not doing invoicing, it just matches straight away. So I'm not sure exactly I don't know what your needs are and why you specifically don't want to match it. But I would say it would make more sense to match them. If you can, you don't have to match them. You can do
one big reason is that my main business is in South America with a different currency.
Okay.
And the reason I want to have this program is in order to have a way that I could see where the business is doing. I have an accountant down there who he has the books according to their setup, but that doesn't help me much to know what's the business really doing.
Okay, so you're talking about, so the issue is that it's foreign bank accounts?
Right.
So you can't import, does QuickBooks not import, I don't know, it's QuickBooks import
I
those banks?
haven't registered to QuickBooks yet.
So there's different ways you may be able to, I mean, this is be more technology, you'd have to be more technologically advanced to be able to do that. You could possibly import transactions into QuickBooks. If you use a third party, there's a thing called Sasant or something like that that does it. This third party software, SAASANT. That's SAASANT. That they do third party. You may be able to manipulate it so you can import into the bank feeds. So you download from your South American bank account into Excel, and you upload it from Excel to your bank feed. You may have to be more technologically advanced to be able to do that. But that should, and then once that's there, you can use the matching feature. But it won't be automatic syncing. I will say, if you're not an accountant, you probably should stay with QuickBooks Online, not QuickBooks Desktop, regardless of the speed issue.
Right. Great. Thank you.
Hi, this is Yermiutka. Thank you so much for the lecture. This is great.
You're welcome.
I have a quick question.
Okay.
What does a bookkeeper actually do? So if we go in there theoretically with QuickBooks and we reconcile everything, all of our expenses and the like, what does the bookkeeper do as a profession that would add to that?
So I think the real question is, are you doing that? Meaning, it depends. I mean, I don't really bill myself as a bookkeeper. We do bookkeeping, but I bill myself more. I do taxes. I do financial advisory, CFO services. You know, kind of designing the future of working with them. You know, to understand the business or the future of the business. The bookkeeper is really there if they're good. They're there to make sure you don't have to do it. They may also do it. They may also, if they're good, you may make mistakes because you may not do it properly. Meaning everything seems simple the way I did it. It's not, practically speaking, you're more likely to make mistakes unless you're very good at, you know, especially if you're learning, you have to learn how to do it. So it's very hard. I don't know your background. I don't know if you're, if you know accounting. If you know accounting, if you know bookkeeping, maybe, especially if your business is simple, maybe you don't need the bookkeeper. But at some point of time, your accounting knowledge is not going to be advanced enough to be able to make those transactions. So if you write a bill, you receive money, for an invoice, you add it to, you use it to pay your invoice, done. And now a bill, you receive, you get a bill, you put it as a bill, you enter payment, done. Now what happens when you go to your bank reconciliation is all these transactions don't match. Are you going to get stuck? Can you do it? Now what happens if you get a bank loan and the bank has a breakdown of interest and principal money? Can you do it, or are you going to get stuck? The same thing. What happens if you're you're taking money out of the business? You're taking out more money than you're making. Are you going to notice that's an issue or not? That's where, and again, it depends who the bookkeeper is. It depends how good you are. It depends how good the bookkeeper is. I know some people who they're lay people, they're not accountants, but they know QuickBooks better than their employees. And sometimes they have a very hard time keeping employees because they get frustrated when they know the accounting software better than employees. And I get that. So that does happen. I have seen that, and I've seen that in complicated companies as well. So it really depends on on where you're holding, on what type of person you have, and maybe you only need financial advisory. Maybe you don't need the bookkeeping. I have a customer who they used to have an employee, 40 hours a week, who do all their bookkeeping. When COVID hit, there were some issues, and I told them, I said, listen, I've been telling them this for years. You're a tech company, get everything, sync everything from all the different CMS systems, all other accounts receivable invoice systems that you have, sync it to QuickBooks. And then you don't need that person anymore. Eventually with COVID, they ended up doing it, and they didn't need an employee anymore. So they come to me for advisory for a higher level if they don't know how to do something, but they don't need someone on the day-to-day basis. So it's really hard. It's really hard to say. It really depends, on your level or the bookkeeper. If you have an amazing bookkeeper, it may be worth to keep them. It's really your call.
Awesome, thank you. I think my main question was, what does a bookkeeper do? And I think you explained that.
Correct. Did I explain it, or?
Yeah, they basically go through the reconciliation, and sometimes
Correct.
it becomes more advanced than what a lay person, so to speak, can do.
Correct. Yeah. So yes, I guess, sorry, I think that's such a good, yes. So a bookkeeper really does do everything. Yeah. A bookkeeper really does do everything which we went through today. The question is, can you do it on your own without a bookkeeper?
Thank you.
No problem. Anyone else? Yes, you're sure if he's still here. Is oh, you're here. Okay.
I am here. Okay,
Okay.
so it looks like we ran the course over here. Very nice, very, very professional. I enjoyed
Thank
it
you.
tremendously, and thank you very much, Shmueli. Everyone else that's here, thank you for joining. I hope you learned a ton. We will send out a link to the recording of this so you can review. If you have any particular questions, you can always reach out to us. I'd like to remind everybody, CHYE has a business mentor program. For those of you that are starting or running businesses and you want to talk to a mentor to get some advice in particular areas of your business, please reach out to us any day, every day. That's what we're here for. I want to wish each and every one of you a tremendous hatzlacha in everything you do. And Shmueli, to you as well. Thank you.
Thank you,
It's just a
Yeshua.
pleasure. All the best.
Thank you everyone for participating. And by the way, Yeshua, you can send out those
Yes.
notes I gave you if you want. I mean, I know it's a little late now,
The
but
notes were separate from this.
the notes were this, yes.
They were this. So you're saying share the right. Aside from okay, yes.
Okay, I mean, if you want.
The PowerPoint.
Was that
Okay,
the
sure.
PowerPoint? Yeah,
sure.
I mean, if they
When we send the link to the video, we'll attach the
correct,
PowerPoint.
yeah, they'd have to look together, yes.
Very good.
Okay. Thank you,
All right.
everyone, and take care.